Hi traders, it's Alberto. It's October the 24th, 2016, and this is a review on the Monday retracement. So let me just go over, I've been getting a lot of emails on how to qualify Monday retracement, and it's um, quite simple. All you need to do is, and I'll give you a list, two or three things. One, look at the previous week. We're looking at Australian yen, and you notice that the past 5 days, the market essentially was in a downtrend. Market started Tuesday, Wednesday, Thursday, Friday. So on the Tuesday, it sold off, rallied, then sold off, and then sold off again on Friday. So what I do is take my Fibonacci tool and I draw from the highest swing point of the week to the lowest, which was Friday. So essentially from Thursday's high to Friday's low. That is what I do. Then I look at MACD indicator and I'm waiting for the 1 hour chart, for the two lines on a 1 hour chart to cross to the upside. So that's my the other signal that I look for. And also price action. If I see an inside bar, I hammer any reversal candlestick pattern on Friday. That certainly will help. And here we had an inside bar at the end of the day. And I do have the pivot point, and of course, if price breaks above the central pivot point, then that means for that particular day, which is Monday, price should continue to rally. Then I look for price targets, and again, the swing high on Thursday to the swing low on Friday. These are my Fibonacci levels. Notice that price broke 23%. It touched at 38 and broke that 38% retracement level. So we're heading to 50%. And the last resistance level is 61%. So if it can get up to this level, then I would exit this trade. It's also hitting a previous resistance from Friday. So that would be the target, ideally. Okay, so this is a very nice setup, ideal setup where price sold off the previous week, and on Monday it retraced. Okay, let's look at some other pairs because we had several retracements. CAD yen. Okay, currently in this trade, Friday the market again sold off. It's Tuesday, Wednesday, Thursday, and Friday. And on Friday, notice we have a morning star in the 1 hour chart right there. And then the two lines of MACD, excuse me, cross to the upside right there. So it's starting to turn around and head north. Then take my Fibonacci tool and draw it from the swing high of the previous week, which is Tuesday, Wednesday, Thursday. For here's Tuesday. So here's the Friday through Tuesday swing high. And I take my Fibonacci tool and draw it from the body of the swing high to the body of the swing low on Friday. And that would give me targets. The first target would be 23% retracement level, which is at 78.16. Currently it's at 77.92. Then 78.43, 50% and 61%. Now, I don't anticipate this to complete its 61% retracement level. It may, but I'm looking for a short gain simply because we're in a strong downtrend on the CAD yen, and any retracement on Monday, any profit is fine. Just you can take a profit at 23 or 38%. I'm shooting for 38% retracement level. I also count the number of pips from Friday swing high to Friday swing low. That was 116 pips. I should be able to capture 40 pips to the upside, especially since we have a morning star on the 1 hour chart. Aussie dollar was another trade, and this was easier because we had divergence on the 1 hour chart. And here is wave patterns going higher and price action on Friday going lower. We have divergence, we had a trend line break, broke 23% retracement level, now it's heading to 38, hopefully to 50. So we took this trade simply based on divergence and a trend line break. So we're currently have about 32 pips on this pair. New Zealand dollar was the other one. It's still early, we haven't even hit the New York session. So again, here's the sell-off on Thursday and Friday. Here's the swing high of the week to the swing low of the week. Price has penetrated the 23% retracement level and headed towards 38 and 50. And again, qualify the trade. You need several reasons to take a retracement trade. You need to qualify the trade. If the market consolidated on Friday, I would discount that currency pair and look for something else, something that moved, at least put in its daily range for the day, if not week. So on this pair of New Zealand dollar, sold off on Thursday and Friday, and there's that Monday retracement. Make sure the two lines on the 1 hour chart are crossed to the upside. Take your Fibonacci tool, draw from the swing high of the last week to the swing low of the end of the week, and that would give you targets. And at the moment, it's a few hours before the New York session opens, and market has penetrated at 23%. And I'm looking for 38% retracement level because that is a strong support turn resistance. If you look at this level of support that was broken, that would be our target. I think we have a few more. It's the USD Swiss, and this one you can still, there's still time to enter this trade. Again, market rallied last week, especially on Thursday and Friday. Take your Fibonacci tool, use the swing low of the week to the swing high of Friday, and that will give you target levels. So we're looking for 38%, 50% retracement level. Two lines of MACD had crossed to the downside. These trades are generally taken at the open of the Australian market on Sunday night. And particularly this pair rallied and then found resistance at a previous resistance level, and that was the entry right there. Inside bar, using candlestick patterns, combination candlestick patterns, MACD crossover. That's all really that you need. You just have to make sure you qualify the trade. So Thursday and Friday absolutely must rally or sell off. In this case, it rallied to have a Monday retracement. Okay, so here's a trade that is in process. We entered this trade at 133.34. Again, qualify the trade. Two lines of MACD must cross to the downside. Price rallied the previous week, so this is Wednesday, Thursday, Friday's rally, and that sets us up for a nice Monday retracement. Take your Fibonacci tool, draw from the swing low to the swing high, and these are our targets. 23% is about 40 pips away, so there's still time to enter this trade. And again, you have to qualify the trade, and there's 3 or 4 things you need to look at. You have to make sure the market rallied or sold off the previous week. In this case, on USD CAD, market rallied for 3 days. The two lines of MACD crossed to the downside on Monday, and there's your trade. And that's it for this tutorial on Monday retracements. If you have any questions, just shoot me an email. Go to our website, fx-northwest.com. There's a contact page. Thanks for watching. Have a good trading week.